right, so our first bullet point up there, IRA owner may take distributions from the IRA at any time. Sometimes that's not a good idea. You're taking it early. This may be retirement money that you want to save and take distributions in retirement, but it's a true statement. IRA owners can take money at any time, can't they?
Absolutely. It's an on-demand account for the most part. And, you know, usually when individuals make contributions to an IRA, the idea is this is going to be part of my retirement nest egg, and I'm not going to touch it until I retire. But life happens, right? And so the issue becomes, is there a way that distributions can occur that will minimize taxes or avoid the 10% early distribution penalty? So when you're having that conversation with a client who says, I have no choice but to take a distribution, then the next step is to determine if there's a way to minimize taxes and avoid a 10% early distribution penalty.
Yeah, and sometimes it's just too late. People take it and, you know, they have to live with the consequences because that's the only money they have.
Yes, yes. You know, for the majority of Americans, if you ask, do you have any money saved? If the answer is yes, those funds will be in their tax-deferred retirement savings account. Right. But, you know, I usually say to the tax professional, when you get that 1099-R and it says a code 1 in box 7, which means the amount is subject to the 10% early distribution penalty, take it a step further and see whether or not the individual does qualify for the exception. The income taxes you can't avoid, but you could possibly avoid the 10% early distribution penalty. And there's a list of exceptions that the client might qualify for.
All right, Denise, our next bullet point talks about required minimum distribution.